I never round down. I want to be 100% invested if the market is according to IBD, if it's in an uptrend.
Okay.
If the market's under pressure, I'm down to 50%. And what I've found with your system is I'm usually out way before the other guys are changing it to under pressure or action.
So you're out before.
And I'm also back into the market before they actually say that I should be.
That's one of the things. So so you find you like, and so the what I'm going to ask you to do, Eric, is kind of walk us through, like on your recent TQQ trade, because you said you just closed it out. We're going to switch over now and take a look at the chart, and
okay.
Again, so yeah, if you want to talk to TQQ and you said you just exited the trade, so go right ahead.
So Dennis, there's several things that I have learned over the years, and patterns and measuring patterns, and I want to show people. So obviously, here's my Fibonacci's. Okay, I'm using the exact same thing that you have: the 8, the 20, the 34, the 50.
Right.
You can see, though, when I bought it and when I sold it. Okay, so that's the green is when I bought it, red is when I sold it. So what I want to point out to you is, and this pattern right here is still in play. This is a Kilroy. Here is your left shoulder.
Right.
Here is your head. Here is your right shoulder.
Right.
This pink line right here is my neckline.
Okay. So, hold on a second, Eric. Let me explain to folks. When Eric refers to a Kilroy pattern, what it typically is a type of a head and shoulders type pattern. And is it typically an inverse head and shoulders, or it can be either or?
It is an inverse head and shoulders, but the guy that actually named it and found this pattern, his name is McGee, and I'm just following the guy that actually named it. But everybody just has this problem with calling it a Kilroy. They see it as an inverse head and shoulders, but I'd like to use the original term.
Yeah, and Kilroy, and that's a reference back to World War II, if I'm not mistaken.
That's correct.
Kilroy was here.
Yeah. So here's the guy. You know, he's looking over a fence. So here's his hand over the fence, and here's his nose that's hung over the fence, and then here's his left hand.
Okay.
So you know you've got this left shoulder, the head, and then the right shoulder, and here's the neckline. So if everybody can see that, and then this white line is my measurement from the very low on up to the neckline, and then I've duplicated it, and I have inserted it on up here. And then I can put my cursor over that, and it says that TQQ will get up to approximately $119.80. I'm not very precise about that. You know, it's the ballpark of 119.
Okay.
So now I've got a target based on this Kilroy. Okay. So I just want to scoot over a little bit, but here's the other things that I'm doing. There's a lot of lines on here, and I understand that, and this may drive a lot of people insane, but to me, it's the exact opposite. When I see a clean chart, it's like you're taking off the important information. This red trend line goes back to 2020. So if the action continues and pulls back to this red trend line, I still know that we're in a long-term uptrend.
Right.
Right. So if you look at my market forecast, you see that I've got all these lines on here. Yes, because this tells me historically, you've told me in the past, Dennis, look to the left.
Right.
Well, I have looked to the left, and this is an area of either support or resistance. Next one, support or resistance. So when we're in this section right here, I feel comfortable until I get to this line. Well, now I'm way above the moving averages. I'm happy. I'm not in really. I'm in no man's land. I'm not at a Fibonacci where I feel like I'm going to get out. So I'm just continuing to go on up now. So I get up here to the top. Dennis, you used to have these cross lines on your charts. You may have taken it off. I don't know. But I continue to use that. That's my sell signal, right? Because my TSI is crossed. Look at where I am. I'm way extended in market forecast. So to me, look for the red arrow. And I've got it color coded for when it changes to the upside. I got a green arrow. Okay. So then I've got this Fibonacci. I'm thinking that it's going to get on up to the 100% and then it's going to fail, but it didn't. So you can see I sold a partial amount right here. Why? Because I was above my 45. I think you use 42, but I use 45. Right. It doesn't really matter. So I'm up in no man's land. If you look to the left, it's telling me that we typically found resistance at that point. So I didn't sell everything. Like I say, it's a partial sale. And then I sell right up here.
Cool.
All right. So I'm just going to move forward.
And just, Eric, real quick, where was your entry on this one?
Well, so my entry was down here.
Okay.
I added.
Okay.
This was my call. I sold the call as a square box. So my squares refer to the options trading I was doing. And again, I wish I wasn't doing option trading or trading in the I'm going to put that to history. I'm not going to trade options.
Okay.
So I'm making a partial buy right here. Making a partial buy right here. Making a partial buy right here. Making a partial buy. I am fully invested right here in T.
Okay.
I sell maybe 25%, then I'm out. Okay. I am 100%. I'm 100% back out of the market, and if I use this location right here as an average, or right here,
right,
that whole move was 26%.
Okay, cool. Yeah.
So that's how I operate, and can this go higher? Sure, but I'm willing to take that profit and go onto the sidelines.
Now you mentioned something about getting up to the 1272.
Yeah. All right. So let's go to the current day. I'm just going to switch this over fast to the current day.
Okay.
All right. So here's my notes. IBD. This was a failed rally day.
Okay.
This is what's called a pink rally day. So you're looking for a follow through day on day 3, or it should be 4 through 7, typically.
Right.
So this is day 1, day 2, day 3, day 4. I bought early, right here. My TSI, you have to follow down right. My TSI has turned up. Our market forecast is approximately down at the 20 level, which suggests that it's going to turn around. My stop would be below the pink rally day. Now I don't use a tight stop. My stop might be 50 cents, might be 75 cents, because I do not want to be taken out These guys know about O'Neill's system of 10, 15-cent stops, and they'll throw it on you and take you out. And I don't want to be out.
That's right.
All right, so I'm buying. Okay.
Okay.
I'm fully invested now in this whole move.
Okay.
My TSI is still above zero. This is good. You look at my market forecast down here. I'm in good shape.
Okay.
Do I worry about this? No. So you can see I've got a 127 fib, and look at where I sold it all. 2 days ago, and I sold it for 122.80.
Yeah.
Yeah. The next day it went up to 123.30. Yeah, I missed out on 50 cents, but guess what? Here is the question I'm going to have for you, Dennis. Where is it going to pull back to? Where am I going to get back in?
Is that a question for me right now?
Well, I'm just asking that right now. So I'm guessing.
Yeah.
Now I know you like to be in the between the 8 and the 20.
Yeah.
I don't know exactly, but if you see over here, I've got an alert at or below 114.75.
Yep.
I'm gonna get a text message on my phone, and I'm gonna get an email to wake me up. I'm sitting on the sidelines right now.
Right on. And so
now I'm going to ask you another question, or I'm going to tell you another question. Right?
Okay.
So if I zoom out a little bit, and I know this is going to be harder to see, but this is a pattern too. Here, down to here, up to here, down to here, up to here. Right? That's a 5 touches. This is an ascending triangle.
Right.
So this black line that you see right here, I've copied it and pasted it on over here.
Right.
This line tells me where my next goal is going to be, and it's going to be approximately 137.
Okay, I like it.
All right, so now if I change my chart and I move up, oh boy, that's almost the 1618. Dennis, you taught me the fibs. I've seen the pattern. I'm making the measurements based on the pattern. It's telling me roughly where I'm going to go to. So I am going to anticipate to buy it back down here around the 100% fib.
Yep.
And then my next exit will be roughly $135.
Yep. And so, and then if you extended that a little bit further on the ascending triangle, if you go back to where you have sold it on 16 April, that's another technical measuring technique. It's just 100% of the total fib. If you get a symmetric move of 100%, that would be above the 1618. How far would that? Do you show?
So you're talking about here?
No, back.
Back in time.
Back. Okay.
So that's April the 15th.
Now go back to where it says April 30th. So
April.
Go back a little bit further.
Yeah, but this is April right here.
I know.
This is April 27th.
Go back to. Read it off your chart. Go back to where it says sold 16 April 21 110 calls.
All right, right back here.
Okay, and then go back to the preceding high.
All right, my 100% to my 100%.
Yeah, right there. That that's another technical way of measuring that. That's where you have your 100% Fibonacci at the top, down to that low, and then that measurement there is another way to measure that triangle, that ascending triangle. But also, you can just take a look at it.
Yeah, so we can. I can show people how to do that without actually doing it.
Okay.
Right. So I've already got a 2 on my curve right here.
Okay,
right?
Cool.
Can you still see that I opened up this Fibonacci retracement?
Yep, that's what I'm looking for.
Can you see that?
Yep.
So I've got a 2 in there, and I can change the color. You know, if people may not have these in here, and you hit add curve, you can change the color. I can make that, you know, my magenta, and I'm going to hit OK. And then if I zoom on out, right there is the 200%. That would be a full retracement of this move.
Yep.
Right there.
Yep. That's
so trading. I'm using the pattern.
Right
my
on.
Head and shoulders. You can see my head and shoulders. My white that I told everybody before told me that I was going to get on up, or suggested that I was going to get back on up to the 127.
Yeah,
which it did.
Love it. So that's awesome, Eric. And then so basically you just basically wait for your triggers, you cycle in, and so what, like on this particular trade where you exited, and I can't see your well, anyway, you exited about 413, 414 right there where you exited, and
yes.
then you had to wait for a month.
Well, yes and no. All right.
Okay.
So I bought some here.
Right.
And I'm doing what I don't like to do. I don't like to average down.
Okay.
So I bought a little bit here. Why did I buy a little bit here? All right. So I got faked out. And you know, I don't mind telling people I got faked out. Look at the TSI. The TSI had come down. TSI had come on up.
Yep.
So I'm thinking, gee whiz, it's making it's changed its numbers, right? So if you look at this box right here, right, when I get down there, it's at 16. Well, so look at the number right there. It's 12. I'm in the zone.
Right.
Where it's saying to me, hey, it's going to cross back up. No, I'm not 100% in. Not at all, because you can see that I bought some right here. I bought some more right back here. I bought some more right here. I bought some more right here. So I'm pulling a number out of the air. I don't know exactly what I bought. I've got a spreadsheet that tells me how much
right.
I bought. But this could have been a 10% purchase. This could have been another 10% purchase. And then when I'm back down here, you know, I'm following IBD. IBD tells me it's a pink rally day. So I just told everybody earlier, day 4 through 7, you're looking for a follow through day. And I was early, I was greedy,
sure.
But I kind of explained to you that the PSI had turned up, and I thought that we were getting ready to take off, and it did.
Okay. Now, so on those as you were coming down to your pink rally day, did you get stopped out at any of those trades, or did you just hang on?
No, I hung on because I had such a small position. This is a 10%. This
okay.
maybe is, I might be 25% invested by this time.
Okay. So
and again, look at the previous day. My TSI had turned on up. This is telling me, hey, I was faked out by it.
Yeah, sure.
I'm finding support right where I thought I'm finding support, and yeah, I'm not happy as it continues to go down. But my overall, and this is the difference between me and most investors. The reason why I choose my 3 is the long term. I believe that the NASDAQ in 1 year from now is going to be higher than it currently is.
Okay.
If you don't have that conviction, my method of kind of buy and hold, this is going to come to fruition. I can hold it until I can sell it for approximately $137.
Okay. So,
but it's buy right, and
buy right
because I'm only looking at 3, Dennis. It's like you're sitting there on the beach and you watch the waves come in. I can see a wave coming in. I know the next wave's coming in. I know the next wave's coming in. You can see this. Look at this. There's a wave right there. there's a wave right there. There's a wave right there. And I'm now so intimate because I'm only trading 3. I'm not scatterbrained with 50 or 100.
Right.
I can see this, and the rhythm comes in, and you eventually just understand what's happening.
Yeah, I like it. Okay, cool. Thank you, Eric. Let's go back to and if you could just whip up the you don't have to do a description of any trades, but just go ahead and put in your FNGU so we can just get a snapshot of what a daily chart looks like on FNGU.
All right, here we go again. So if I zoom back on out a little bit, this is a descending triangle. I've taken this curve extension off.
Right.
But this touches exactly right here. So I have what's called a descending triangle.
Right on.
And as you told me before, you can see that I've got this dark line right here.
Right.
And as soon as it broke out from that line, this is my target now for FNGU. It's at 32.85. Is it going to hit that exactly? I don't know.
Yeah.
But that's telling me that I gotta be thinking about it, right?
Right on.
So that's the reason why I don't want to remove this, because you've taught me, and it happens so often. It's going to go above this downtrending line. It'll kiss it and then kiss it goodbye. Well, that didn't happen right on this instance, but if you look at where I actually got in, I got in here. Same reasons that I did with T, right?
Okay. Yeah.
I was at the 0 line, and it's telling me, okay, you might be there, right?
Yeah.
My market forecast is telling me this dashed line that I have there is what I consider either support or resistance.
Sure.
So I was expecting support. So did I buy some more right here? Sure. I'm right at the 50-day, and then I held it, and I'm not happy. But here's my green arrow that I told you about. This makes it kind of almost idiot proof. You buy when you get the green arrow, and you sell when you get your red arrow.
Right.
Here I sold 10% right here.
Right.
Why? Because I'm way extended. You told me, Dennis. You told me. Look to your left. So that high was 76.90. What's the high right there? 67.
Right.
What's the highway? So I know I'm too far extended. I'm not hitting my normal Fibonacci right there.
Right.
But it's telling me I got to get out. I made a new high.
Right.
Right. So I've got an uptrend. Where is it going to pull back to now that I've I sold half here and I sold half here.
Right.
So I'm out of this position today.
Okay. Cool.
And now the magic, what I consider the magic, comes into play. What's the price going to be if the TSI gets down to roughly this level?
Right.
If it breaks that level, then I'm going to be expecting it to go back down to 0.
Right.
And you guys start looking at this and thinking about where's this price going to be, and you just put an alert in. I haven't done the alert yet because I just got out of my position today.
Right.
But look at it. There was a shooting star right there, Dennis.
Right.
Right. We might have had a hanging man. It's close to hanging man. I haven't done the calculations, but look at your TSI. The TSI is telling me I got to get ready to get out.
Right on. Yeah, without a doubt. Cool. What about just flash up SOXL really quick? I want to give everybody just a picture of.
All right, same situation. There's my shoulder. There's my head. There's my shoulder.
Right on.
my extension tells me that it's going to get up to roughly 5650, roughly.
Okay.
All right. It hasn't hit that right now.
Okay.
Folks, I'm gonna give you one other piece of valuable, absolutely positively valuable information. You have to look at after hours. I start on my weekly chart or my daily chart to put my fibs in.
Right.
And then I go to my 78-minute chart. 78 minutes divides the entire day equally.
Right.
So instead of an hour chart, and I've found that I'm much more successful now on a 78-minute chart. But action that occurs after hours matters. And I will change my Fibonacci, not just to this day, but I will go to the after hours. And the high for that day, the high was you can read it right there. The high, if you're reading the high right here, the high that day was 53.30.
Right.
But look at my Fibonacci. It got to excuse me, did I get that wrong? 45.30.
Right.
And my Fibonacci is at 45.35.
Right.
I used after hours to adjust my Fibonacci because it works, and it after hours are less important, but they're also important.
Cool. Okay.
So again, you've got this downtrend. That you can see this white line that I've got right here. You can see this downtrending line.
Right.
You can see that I took the measurement rule. I've applied it at the end of the uptrend. Now, here's what I'm expecting, Dennis. This is going to come back down,
right,
and kiss this line.
Yeah.
And then go by.
Right.
Although I haven't exited my positions yet. This is where I'm struggling. Do I exit now, waiting for it to come back down here and kiss it goodbye?
Yeah. Yeah.
But to me, the semiconductors, IBD, made it a statement years ago that I copied and put on my chart. It says semiconductors lead the market, and it's true.
Mm.
So I'm still bullish. If it comes back down here, it's not. I don't think it's going to make a lower low than that swing low.
Right.
So it might come into what you taught me before. It's gonna come back down to the averages.
Yeah.
So
yeah,
combination.
Yeah, it's wonderful.
Patterns, measurement rules, the Fibonacci's, the TSI and market forecast. I've kind of seen some people have talked about the MACD. MACD doesn't work for me. It's too late getting in, and it's too late getting out. But that's my opinion.
So yeah, I love it, Eric. In fact, go ahead and switch back to one of the things that is just absolutely awesome is just how you have applied it, and in reality made it your own as far as how you're going to apply. And I love the clear and simple approach of we're going to do 3 entities. They give you a good return over and over and over again. So bingo, bango, that's a good thing. And I love the way you're using it.
Let me just show you real quick. GDX.
Okay.
GDX. So I got my Fibonacci right here.
Right.
All right. It pulls back into the magic fib box that you've taught us about 1,000 times.
Right.
Where does it go? It goes up to 127. Where does it retrace back down to? 100.
Right.
Where does it go? 1618.
Yep.
It happens, guys. You can use these Fibonacci's as your entries and your exits, but primarily I use them as my exits. Now here's my stupidity. I thought that I needed to get back into options. I bought a call right here, and I'm not out of it yet, even though I should have. But I'm not out of it because I'm expecting it to get back on up. But that's, look at the Fibonacci's. It told me how to trade GDX. Now I didn't trade it, but I just wanted to show that I had this on there. This is not something that I just drew on because you and I were going to be talking. I had put this Fibonacci on here. I'd been watching it at that time. If the members remember, I had kind of been talking about GDX back at this time frame with people on your show. And that's what I was looking.
Okay. Hold on a second. I'm jotting down a note, man. You have helped me get some refocusing done here. Let's see. I'm looking at so basically, Eric, let's go ahead and switch back and just do. So, hey, Eric, I wanted to just say thank you very much. So here's some things, and correct me if I'm wrong, but here's some things that I come away with after chatting with you. Is one, you look for patterns, and you really like the Kilroy pattern, which that's a great, that is a pattern that keeps on rewarding you and rewarding us. I mean, I look at it, I see the same pattern, I call it something different, but that's okay. But the patterns takes into consideration price action, and price action is always king. 2, you apply the technical measurement rules and throw in some Fibonacci's for determining where prices are likely to go.
Right. And
then you basically exit when you hit those price targets, which I like. And then you utilize the TSI and market forecast and perhaps the moving averages to some extent.
And don't forget about reversal candles. Looking for reversal candles at those same levels.
Okay, and reversal candles. So would you group the reversal candles into the patterns as part of the price action?
So there's been a time or two, and I can't bring up a chart right now that I can show you, but there's been times where I saw a hanging man.
Right.
And the hanging man was not at my plus 45 on the PSI.
Right.
To me, it's a fake out, and I didn't take that hanging man, even though that hanging man is my reversal candle.
Sure.
I didn't take action on that only because my TSI and my market forecast were still pointing up, and it was not telling me that it's anything other than a fake out. And so what if I had actually taken it on out and sold it? It would have been for a profit.
Okay.
Then I just got to wait for the pullback, and that's where I get frustrated. Pullback didn't happen. They wanted to shake out the weak investors, and fortunately in that instance that I was thinking about, I wasn't taken out.
Okay, cool. Well, as we've been sitting here chatting, been watching the Qs are actually coming off of their past highs. We'll see. And it looks like if we close where we're at right now, the TSI has in fact crossed over on the Qs. I don't know about the other entities, but anyway, Eric, that was really beneficial. One, I want to thank you so much for just sharing with everybody, and look forward to continued success with trading the system. And I know there was one last question I had to ask though is, so are you trading the inverse at all, the inverse ETFs?
Glad you brought that up. So when my market forecast is way up there, 80, 90,
right?
Okay. And I'm struggling because the market forecast is going sideways for a while. I will occasionally look at the inverses. I'll use SQQQ and look for the uptick that might occur before my downtick on TQQQ. And I can use that, and I do look at those every day in conjunction. I'm looking at FNGU, and I'm also looking at FNGD when I think I'm at extreme. But the backwardation in contango makes it much more difficult.
Yeah.
On the inverse,
right?
Than it does on just a straight bullish side.
Yeah. One of the things I encourage people, if they're going to be trading the inverses, is typically, traditionally, markets fall like 2 to 3 times faster than they rise. And so if you're going to be trading the inverses, you can expect a really nice move. It may move 15-20%, but it's going to happen in 3 or 4 or 5 days rather than waiting for the longer term. So
yeah, I'm only up for a day or two, maybe 3 or 4 days, like you say.
Yeah,
it is a fast turnaround, and you put your order in to sell at the time you're actually filled.
Right on. And the other way I protect myself on the inverses is I will typically only do a half a position. And it's just it's a protection thing. So, hey, cool, man. That basically. Yeah, I'm going to start the recording here and just.
Well, before you do, just wanted to say, Dennis, thank you for being a great mentor to me. This would not have been possible without your guidance and your teaching.
Well, man, like I said, we have a mutual admiration because I love what you have done, and I hope more active trend traders will take you as an example to say, okay, hey, 1, you can do it. 2, it does take, it's like anything else that you want to master. It takes time to basically master it, and I'm just interested to see. And again, I want to thank you so much. Give my best to your lovely bride, and
thank you, and to yours.
And we look forward to the next time you get to come over to Hawaii, or we come to the East Coast, which
you're welcome at my house.
Well, you're awesome. And so, okay.